Hello, this is Sandra Cho with Point Wealth Capital Management, and today I'm going to be talking about May 2023. I'm wearing a black turtleneck today because Elizabeth Holmes reported to prison in May to start her 11-year sentence for defrauding investors on her blood testing startup company, Theranos. I'm not wearing black in homage to her, but in mourning for the role model she could have been to other businesswomen such as myself. Now moving on to something happier, let's talk about the markets. Sell in May and go away didn't prove true last month. The markets were up, although the NASDAQ continued to outperform the broad market and did about 18 times better than the S&P 500. Year to date, the NASDAQ is up over 30% without breaking a sweat, with the S&P up about 10. In fact, Nvidia and Meta alone are both up over 100% year to date. But don't be too quick to count your money, since the broad market hasn't actually done that well. Meaning, if you were diversified, as you should be, then it's likely your year-to-date return was more likely in the low single digits. Focusing on sectors, the biggest winner was the information technology sector, with all the buzz being about AI. The worst performing sector was, you guessed it, energy, at negative 8.9%. Other news in May, the Fed raised rates by another quarter basis points, which is the 10th increase in a little more than a year. This brings the Fed funds rate to 5.25%, which is the highest since August 2007. Thoughts are that the Fed is going to pause in June and continue hiking later in the summer if inflation doesn't calm down. Even though rates increased in May, I think our lucky stars we didn't see another bank failure, something we obviously took for granted before this year. Globally, both the UK and the EU also raised rates a quarter of a basis points, just like the US. Even though more workers entered the labor force, the unemployment rate still ticked back down to 3.4%, tying January's historically low number. As mentioned in previous monthly updates, high employment causes concerns about sticky inflation. If you have money, you are more likely to spend it. Currently, inflation is at 4.7%, with the Fed's ideal rate at 2. Also in May, the Writers Guild went on strike. The WHO announced that the COVID pandemic is over. Meta was fined the equivalent of 1.3 billion US dollars by Ireland. And drumroll, it looks like the U.S. narrowly avoided default by passing a debt ceiling bill. That's it for May. See you in, hopefully, sunny June.